Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group. Operationally, we are a hedge fund. And now, God is very kind. We are 1x long short hedge fund. Now, 1x long short hedge fund is a very technical term. So you need to learn it from Google, but this is a very unique distinction, to be honest. We have interest in US, Europe, and Asia, but I did repeat it many times and would continue to repeat, which is we are a prop desk. By prop, we do not accept third-party capital. So, we only trade with our own capital. Today, I would be covering a very hot topic, which probably on the radar in another 2 weeks or so, maybe lesser than 2 weeks or so. European Union is trying to ban 90% of the Russian oil. And Europe is the largest importer of the Russian oil, followed by China. 40% of the natural gas supply in Europe is happening from Russia. So Europe is trying to ban the Russian oil. This would have huge repercussions in the oil industry. And by repercussion, I mean for a longer period of time. Not for a shorter period, but for a longer period of time. This is something which we need to learn and we need to understand very well. Number one, if any Einstein, Edison, and Newton is thinking that they can replace Russia in oil and natural gas, then he needs to do another MBA. Because replacing Russia in natural gas and oil is a dream, which would never happen. Because Russia is the largest oil player in the world and number 2 as far as the natural gas is concerned. So if you are thinking that you can replace Russia easily, then please correct yourself. Number 1. Yes, if you are trying to ban Russia or Russian oil, then the oil prices, both Brent and NYMEX, would swing and probably 200 per dollar on the cards. Let it be honest. I'm not giving any trading call that you buy oil tomorrow. No. In other words, we may see a substantial volatility in the oil in another few weeks. By substantial volatility, I mean one day oil will go up, another day it will come down, then it will go up, then it will come down, then probably few days it would be flat, then it would go up, then it would come down, like this. And this volatility would trigger the commodity hedge funds, like we have equity hedge funds, we have fixed income hedge funds, we have currency hedge funds, we have thematic hedge funds, we have short long hedge fund like us, we have commodity hedge funds also, who take substantial positions in the commodities. The volatility in the oil prices would bring commodity hedge fund on toes. And I might not be surprised that many commodity hedge fund may wind up also. In the last 2 years, more than 200 hedge funds of the globe winded it up. And very recently, Melvin Capital, which is one more hedge fund, winded it up. I did made a video on that. Probably it would be live on the YouTube after editing. Another beautiful thing that would happen once Russian oil would be banned is the Saudi and the other OPEC nation, Organization of Petroleum Exporting Country, OPEC nations, would get a substantial lift in revenue. Because common sense, the world would be dependent on the OPEC. And when we speak about OPEC, the first name that came to the mind is the Saudi. Saudi will get a substantial profitability from the hike in the oil prices. In India also, Reliance Industries Limited and Indian Oil Corporation, ONGC and other would get benefit from that. Now, whether this benefit would be as equals to what Saudi will get, only the time would tell. We really do not know, so no comments. Another thing that is going to happen is the inflation. The substantial hike in the oil prices, because common sense, the Russian supply would be almost zero. That is a separate thing that even today, Russia is selling the oil at 32% discount. So today, while doing the research, I was checking and speaking with few people. I was checking that, how would I would say that they were telling me that Russian oil is available 32% lesser than the Brent. 32%. Now, if this ban, which European Union trying to put on Russia, if this happens, example, then this 32% might be more than 40%, maybe more than 45%. Time will tell. China is still thinking, although the public information doesn't confirm that China would like to buy the Russian oil, but still China is thinking to buy the Russian oil. Chinese yuan and Russian ruble, the trading flow of Chinese yuan and Russian ruble is 1000% in few weeks. This would inflate the inflation, which is already outside the scope of most of the central banks of the globe. Already outside the scope of most of the central banks of the globe. And we really need to understand one thing very carefully, that the central banks, example Bank of England, example Reserve Bank of India, example Federal Reserve and all, if they are thinking they can contain the inflation by hiking the rate, then they are completely incorrect. Because this isn't a demand side problem. This is a supply side problem. And it cannot be contained by hiking the rate. So guys, in another 2 years, for a while, if we assume that European Union ban on Russian oil to continue, example, we will see a substantial volatility in the commodities market. Now, by commodities market, I would say it would be oil, it would be nickel, it would be platinum, it would be palladium, it would be tin, it would be lead, it might be copper, it might be any other base metal, except gold and silver. Because gold and silver volatility is dependent on other factors than what I am talking right now. The volatility in the commodities market would trigger a substantial mess, not only for the hedge funds, but also for the retail investors. Because everything would be mean reverting. And hedging a mean reverting asset class is always a tough. So to conclude today, please be very careful, because Russia is advancing in Ukraine. and you have this information on the Google, you can check yourself that Russia is advancing in Ukraine if you wish to do some research. And God forbid, if there is any bad news came from Ukraine, God forbid, then this would definitely have an impact on the global financial market. I am on my toes. I am not relying on the media. I am doing thorough research on the Google, trying to have maximum information which is coming from the Google, and then try to analyze what the hell it is happening. So I have no reliance on the media. Whatever media is saying, I'm just listening, but I'm doing nothing. This is very clear cut statement from my side. So please be very, very careful. This is what I would like to convey. Don't just carried away by the media. I'm telling you. Don't just carried away by the media, else you know what the mess is going to come. Anyways, if European Union would be signing an agreement on the Russian oil flow, then definitely we will see a lot of volatility in the coming days. Indexes, I'm not specifically naming any indexes because I know if I name any index, then people will start copy it. Indexes will crash because common sense, we will see a lot of volatility in the markets. This is what I would like to convey today. This is Rahul Magan from Treasury Consulting Group. You knew my personal number 9899242978. I repeat, you knew my personal number 9899242978.